Good evening, everyone. My name is Paul Young. I'm going to walk you through what the balance of payment means to a country. It's an area that you're going to hear a lot of rhetoric about it, that Canada is in a deficit position. I'm going to clarify what impacts that. I can't start with the balance of payment unless I talk about GDP. GDP is the gross domestic product. It's the amount of value of all goods and services in the country. The primary drivers are three pieces to it: consumer spending, which is the domestic market; exports, which is the international market; and government spending. Now, there's more complexity to that, but in a nutshell, that's how GDP flows. Now, this tape typically looks at analysis by sector. Okay, so basically, the bulk of GDP in Canada is driven by the service sector. Now, there's a lot of spin and rhetoric around that service sector, but the service sector has multiple facets to it, from government to distribution and reselling to financial service sector. That's all part of the service sector. So you can't just make a quick statement that the service sector pays poorly. You have to look at individually segments of that to get a clear understanding of that. The second thing is, a good portion of the Canadian economy is still good producing, from manufacturing to oil to forestry to utilities and construction. And those jobs typically pay well as well. So you need to understand that what's happening in those sectors. What is a balance of payment? Take it in a nutshell. Canada buys goods and sells goods on a world stage. This means they're bargained with currency. So if Canada's working on the global scene of moving goods and services around in the flow of capital, then basically what happens is you've got receipts and you've got outflows. So what happens, basically, the money coming into the country is called receipts. Just like when you get paid on a paycheck, you get your money coming into the account. That's your paycheck. What you pay out is your expenses. Well, the outflows are very similar to that in terms of what goes out. What you're seeing here is in 2014, the total receipts the government received were $722 billion. The total outflow is $763, so about $52 billion deficit. Now let's talk about that in general. What would trigger that? Well, first of all, trade deficits. So if we're importing more than we're exporting, that's going to cause a problem. If we've got investment income flowing out through dividend or interest offshore as part of the tax planning, that will cause a problem. If we got more people doing tourism, going outside the country to travel, that hurts the domestic market. So this is what you're kind of looking at in terms of the outflow. Now, let's talk about what the government's not talking about in general. If you're going to bring in and reduce that balance of payment, you have to focus on key areas: adding capacity, reducing the environmental assessments, return on investment, and productivity improvements in terms of the capital investment. Now, if I'm a company right now and looking at investing my limited capital, I'm going to look for bang for my buck in terms of ROI. If I believe coming to Canada is going to have huge issues from policies, and all we have to do is look at a couple key provinces. We look at Ontario, we look at Alberta. What have they done? Well, Alberta, under Premier Notley, has decided to do a royalty review and likes to hike that. That's a cost of business. She's looking at she's already hiked corporate taxes. That's an impact to business. Kathleen Wynne in Ontario has said, you know what, I want more money from the private sector, so I'm going to bring in a carbon tax. I'm going to bring in a Ontario registered pension plan, and I'll look at other things that impact business. That doesn't help the flow of capital in. That actually leads to excess of capital. It's capital coming in that's key to help reducing the balance of payments. So you're not going to hear that. Okay. So also, it's investment. So if companies are not feeling comfortable investing in Canada or Ontario based on taxation rates, guess what? They're going to go elsewhere. Imports. We continue to buy the cell phone, so don't buy the cell phone anymore. Don't buy those expensive jeans or clothes. That'll impact imports. Okay, are you willing to pay more for those imports? If so, then maybe we could bring some of that back. Travel. Well, that will be driven by a lot of it the Canadian dollar now because it's weakened, so that'll impact it. So the key thing is, you're going to hear a lot of rhetoric talking about government and the capital outflow. What they're not going to tell you is what's going to drive that change. Justin Trudeau just recently made a speech in Europe. He basically called out Stephen Harper. Canada was not open for business. Canada has been open for business. Well, under the watch of Stephen Harper, he's expanded trade and investment deals to help the country. That's what he's done. He's also brought in innovation funds, okay, to help bring ideas to market. Is there more could be done? Yes, more to reduce that time to get projects off the map. But where has Justin Trudeau come out and said he's going to improve the assessment period? What he's done is, I'm going to support climate change. Okay, he's going to support green technology. We already have SDTC out there, which is Sustainable Development Technology Corporation. So, in essence, what Justin Trudeau do? He will ride the policies of Stephen Harper. He likely won't bring any new trade investment deals in. That's what he'll do. What will he do on the assessment side? He's been incoherent. Okay, what's he going to do in terms of reducing trade barriers in the provinces? He's been incoherent. What's he going to do to stop bad policies at the provincial level? Said nothing. So if you're going to ask yourself as a business leader, what does Justin Trudeau bring to the table? Well, he doesn't bring anything to the table. He's just a figurehead for the Liberal Party that isn't really come up with a coherent strategy to help grow the economy. Thank you.